Welcome to the B.F. Anderson Technical Fundamental Report for May 25th. The psychological condition of fear is divorced from any concrete and true immediate danger. It comes in many forms: uneasy, worry, anxiety, nervousness, tension, dread, phobia, and so on. The kind of psychological fear is always of something that might happen, not of something that is happening now. So fear is a counterproductive emotion because it freezes people. The main thing is as you can see here with this survey, which is a 1,000,000-person survey done by AAII, fear is the dominant emotion in the market right now. So if you really think about this, what does that mean? It means that there's a lot of cash on the sidelines. There's a lot of fuel for the fire. If we get a new bull market going, there's going to be a tremendous amount of capital that can fuel the next bull market. So what is the next bull market? Well, Paul Tudor says artificial intelligence will spark the next productivity boom. Well, artificial intelligence, let's think about the word. Artificial meaning fake, intelligence meaning brain. So this is nothing more than technology that is capable of a fake brain. So these are the generals. In other words, there's a saying on Wall Street, when the generals lead, the troops will follow. Microsoft, Advanced Micro Devices, Google. The big daddy is NVIDIA. They announced earnings last night. Stock is up big. Looks like they've got the right chips for the technology. So on this technology, you have to think about what are the possibilities here. Okay, if these are the generals, what are the troops? Well, just like with the internet, if you remember back in the 90s, we had Cisco Systems, which was the main general. But then you had a lot of troops. Things like Amazon came along, America Online came along. Many companies came along that benefited from the technology. Well, probably the same thing is going to happen here. You know, as we speak, 3 years ago, a company called Waymo, which is a division of Google, started a project in Phoenix, Arizona in the year 2020. So it's been 3 years they've been working on this. And what it is a robo-taxi that operates in Phoenix, Arizona. It operates within a 180 square mile area. It is successful. People like it. It seems to work. They're looking at Austin, Texas as their next robo-taxi city. In Israel, for example, Mobileye is working on a robo-taxi technology. Now, speaking of fear of things, one of the biggest fears I hear out there is about how the federal debt is going to destroy the country. And it's not good, I admit. But look, this is back in the 1980s, 1990s. We got up to 160% of GDP. Now, right now, we are, here, but it's going up, which is not good. This is the percent of interest that is paid on the debt. You can see it rising as well. So back here we had real high interest rates. We're getting higher interest rates here, but we'll deal with it. We always have. We've been in worse shape before. We'll get the debt under control. You just have to be optimistic. However, I wanted to look at the market real quick. Let's just take a look at 5 indexes because you need to really look under the hood here, because we're seeing a lot of strength in the NASDAQ, which is certainly a positive, but we're also looking at the mid caps, and you can see here they're just not participating. The middle-sized companies, meaning the troops, just aren't participating in this rally. Here we have the New York Composite, same thing, actually breaking down yesterday. Here's the small caps, same problem. We've just got a really difficult period here with the small caps. Now, they do have a lot of regional banks in this index. Now, here's the S&P 500. It actually broke down as well yesterday. So things still move slow here. Be cautious. This is not a time to be a hero. Now, however, we're starting to see a little of improvement in this ratio here. This is the number of new highs on the NASDAQ minus the number of new lows, and we crossed above zero for the first time since the banking crisis. So hopefully this means that the worst is behind us. Now, the problem again is, here's the S&P. Now, this is the number of new highs on the S&P, which is basically anemic. I mean, it's just nothing. I mean, we only had 3 new highs the other day. Needs to improve. The aggression index, because of the NASDAQ, is really starting to take off here. So we've made a major low, which we think is the low, consolidated. Now we're breaking out. So hopefully here that means that growth stocks are going to start to take the lead. However, when you look at the S&P on an equally weighted basis, meaning that you're not factoring in market capitalization, you're equally weighting every stock in the S&P 500. This doesn't look as good as the S&P or the NASDAQ. You can see here breaking down. Also on a relative strength basis to the S&P, it's just continues to be weak. So it's a narrow market. That's the problem. We need to see this market broaden out. Now, also I wanted to mention we're seeing some trouble here in the interest rate world. Interest rates are moving back up again. Here's the TLT, which is the 20-year Treasury note or 20-year Treasury bond, breaking down, not looking positive. Then also here on the consumer staples. Now, we don't want to see any group go down, but this is a group we'd kind of like to see cool down. This is the consumer staples. This is part of the aggression index. This would be, things like toilet paper, toothpaste. So we're seeing a breakdown in the staples, which actually is somewhat of a positive. Now, on the regional banks, just wanted to touch base on the regional banks. We're continuing to see them floundering, kind of broke down, as you can see, moving sideways. Hope to see some improvement there. So if you have any questions, let me know. But remember, don't be complacent here. We're probably going into a period of great opportunity, especially in the technology area. Thank you very much.